To the markets right now, the Nigerian market opened today on a positive note with a gain of 1.5%. The all-share index has again crossed 40,000 points, moving the market today. Shares including Dangcement. And let's cross now to the Nigerian Stock Exchange, where Roslyn Oliyede, Senior Associate at BGL Securities, is standing by to talk us through the markets. Roslyn, thank you for joining us. We saw this play out yesterday as well. The market started on a pretty bright note and then fell back a little bit. Again, we're seeing Dangcement move this market higher. Your thoughts on the volatility we've seen recently? But I think the good news, though, is that the market continues to go higher.
Yes, it's expected, with Dangcement accounting for 25% of the total market capitalization of the stock exchange. You expect that kind of response. Now, the good thing is that the ASI has crossed the 40,000 mark, with Dangcement gaining 10 naira. So I believe that it's still we're still likely to see another update. Fine, profit taking will take place, but by and large, we expect that there's still value in Dangcement.
All right. Do you think, though, that we will stay above 40,000 today? We saw this happen, like I mentioned yesterday. Are we likely to see this trend sustained? Do you think Dangcement is likely to fall back? Because it's all about Dangcement, isn't it?
Yeah, well, like I said, there's still value in Dangcement. Don't forget the expansion in the sub-Sahara region for Dangcement. So there's still value. Fine, is the market. The ASI will go up and down because Dangcement is taking a sizable portion. But as long as there's value in Dangcement, people will take profit, but they will sell down and then they'll still continue to move higher. So right. Dangcement is still strong buy for it.
Okay, of course, one of the losers at this stage is Nigerian breweries. Another is Access Bank. So a pretty mixed bag there, but of course it's still early days in the trading session. Your thoughts about the banking sector in particular? It seems to have been, it's not involved in the recent bull run we're seeing on this market.
Yes, what we have seen of late is people swapping assets, so to speak. People are selling down on their banking asset to go into the high-cap industrial stocks, you know, because of the gains there. But then we want to quickly sound a note of warning that most of these industrial stocks, people should be cautious because they are trading at PEs above their stocks in the emerging market. That notwithstanding, it's not as if there are no value there, but people should trade cautiously. But then value is presenting itself in banking sector, more importantly because of the AMCON refinancing of AMCON bonds there. So, and then many of them are really oversold, and I see another rally in that sector very soon that will even take the ASI even above the present stage.
I was just going to get to that. Do you think we're going to see this rally extend into the banking space? It seems to be left behind right now, but like you mentioned, a lot of analysts have pointed out there is value in the banking sector.
Yeah. Many of them, they are trading now at PEs below 10. And then for some of them, they are going to announce their interim result that will spike rally in that sector. So I see rally returning to them, coupled with Dangcement. I think we are still good to go on our ASI region.
Okay. Now, Union Bank is at the stock exchange today, presenting facts behind its Q1 numbers, trying to explain its story to stockbrokers. And we've seen Union Bank do pretty well over the last at least over the last 1 year. Clearly, the worst is behind the company. Your thoughts about Union Bank as an investment opportunity?
Well, yeah, coincidentally, Union Bank has returned 25% to investors since 2 weeks ago. They are here today, immediately after trading, to present their fact behind the figures, fact behind their strategies, fact behind their year-end result, and fact behind their profitability. And then I want to believe that they're also going to tell us what they are going to do going ahead. So I see opportunity there. Don't forget that they have the lowest float in the banking sector. So that is accounting for the rally you are seeing there. They have about 10 to 12 billion. So that accounts for the kind of result you are seeing. But by the time their facts will emerge today, the value will be exposed to investors, and I see people taking position in that stock as well.
All right, you just mentioned the issue of float, and I think that's one thing that some people have pointed to in the consumer-focused companies and perhaps even Dangcement, the fact that there aren't that many shares that are tradable at the moment. Huge chunks of those shares are held by institutional investors or strategic investors. And to what extent is this having a bearing on the banking sector in particular? Because in the case of the banking sector, the free float of the companies is a lot better than in the other sectors.
Yeah, you are spot on there, Wale. But the good thing about banking sector is that the kind of volume that will command the kind of profitability you can't get in high cap stocks. So you still see value investors doing banking. Particularly, most of these banks, by the time they release their very impressive result, they turn out to reward investors. So for the patient investors, for the value investors, the banking, despite their float, will still command higher returns.
Okay, so
on the long run.
let's focus on the banking space. Which stocks do you like in that space?
Well, without holding back on any other one, I see value in UBA. For me, UBA is still oversold. And again, because of the float issue that we mentioned.
Right.
With Stanbic, if you notice, Stanbic, because it has 10 billion, is doing 17 naira. UBA is doing 14 naira. But by the time you discount the float on UBA, and UBA is trading like a PE of 8.56, UBA still is a good buy. Access and guarantee. But for the returns on this ICAP, these stocks will have really rallied for investors. So I see value in Access, in Zenith. We can see the demand there. It was the highest top volume. You can see some demand there. Zenith, Access, GT, and UBA. They are very good with fundamentals.
What about the tier 2 banks, the likes of Diamond Bank, Fidelity Bank, the smaller banks? Do you see value there as well? Do you think that these stocks are likely to rally going forward?
Well, fine. For this bank, you notice that they've gone shopping. They are selling Euro bonds now. And then investors are also looking that way. By the time they get past this capitalization, we are going to see more cash available to do to loan to investors. So on the mid and long term, investors should look at the tier 2 because they are really doing so much in capital raising. Some of them are coming for right issue. They are selling Euro bonds. And I think it is all in a bid to increase their bottom line.
All right. Now, coming back to the issue of liquidity in the market, and I'll be speaking to Executive Director of the Nigerian Stock Exchange, Jalo Waziri, in a minute. And the market making program that took off last year, I think the feeling is that it hasn't been totally successful simply because we haven't seen securities lending come to the table. How would you assess the impact of the market making program so far?
Well, I want to commend the management of NSE. I mean, the stride they've made so far concerning the market making program. Part of it is engaging AMCON to be able to be a top security lender, and effort on that place has gone very well. So I see by the time they are through with that program, market making is really going to be sitting pretty well, and then we are going to see liquidity returning to the market. So before now, if market makers before now, with all the structures not fully in place, is doing this much, I believe by the time the program is orbit, we're going to see a lot of activity there. And then I think by the second quarter, we are going to wrap up everything about security lending, about short selling, and then we are going to see a sustained rally on our market.
Yep. I recall that when the market, when they began to identify stocks for market making, that really was the time that this rally took off to another level, way back in September last year. So do you think that if we get the securities lending program in place, like you mentioned, maybe at the end of this quarter, that this may be the catalyst to take the market higher in the second half of the year? Exactly.
When initially it took place, market makers were building inventory. But then we now come to issue of liquidity, and then we saw stocks trading sideways. So liquidity is still key. Security lending is the way out. So by the time the program is out, definitely it will be a major catalyst to really push the market to higher territories.